What do the distribution codes on from 1099-R mean? Have you ever received a tax form and wondered what all those codes mean? If you have a retirement account, you might be familiar with tax form 1099-R. This from reports distributions from retirement accounts like individual retirement accounts, 401(k) plans, and pensions. Understanding the distribution codes on this form is essential for managing your retirement planning effectively. Let's break down what these codes mean and how they impact your taxes. First, let's talk about Code 1. This code indicates an early distribution with no known exception. If you take money out of your retirement account before reaching age 59 and a half, and none of the exceptions apply, you will see this code. This often results in a 10% penalty tax on top of regular income tax. Next is Code 2. This code applies to early distributions where specific exceptions exist. For example, if you separate from service after age 55 or take a qualified withdrawal, this code may apply. While you can avoid the 10% penalty, you still need to pay income tax on the amount withdrawn. Code 3 is used when a distribution is made due to the account holder's permanent disability. If you are permanently disabled, you can withdraw funds without facing the early withdrawal penalty. Then we have Code 4, which is for distributions made after the account holder's death. This code applies when funds are distributed to a beneficiary or the estate. The tax treatment of these distributions can vary based on who receives them and when. Code 7 indicates a normal distribution. This code is used when you take money out of your retirement account after reaching age 59 and a half. Typically, there is no penalty for these distributions. Code G represents a direct rollover. This means you have moved funds from one qualified plan or individual retirement account to another without it being taxable at the time of the transfer. Code L is for loans treated as distributions. If you have a loan from your retirement plan that is not repaid on time, it may be treated as a distribution, leading to tax consequences. Lastly, Code P refers to corrective distributions. This code applies to refunds of excess contributions or other corrections. These may be taxable in the year they were made or in a prior year. Understanding these distribution codes is vital for effective retirement planning. They dictate how your distributions are taxed and whether any penalties apply. For instance, if you take an early distribution coded as one, you could face a 10% penalty, which can significantly reduce your retirement savings. On the other hand, knowing when exceptions apply, like with codes 2 or 3, can help you avoid unnecessary penalties. When you receive tax form 1099-R, pay close attention to the codes in box 7. This will help you accurately report your income and understand your tax liabilities. By being informed, you can manage your withdrawals effectively and comply with Internal Revenue Service rules.